What's going on, guys? It's GBP baby. Welcome back to another video. I hope everybody's doing well, and let's get straight into things. So yeah, we're going to start up here on the monthly. We're going to take a look at where price seems to be drawing to and where the pull on liquidity is and where our imbalances are lying. And it is pretty obvious in terms of where we see fair value gaps, but it's also important to acknowledge where we're pulling away from as well in terms of from the sell side and buy side of the curve. So as you can see, very recently on the monthly, we've filled in a fair value gap, traded up into this bearish order block, sorry. You can see how we're getting a strong reaction off of that. And then in terms of discount PD arrays, we do have this fair value gap right here on the monthly, straight down towards, and then we have this one as well. Now this one's obviously the nearer imbalance, so I'm expecting price to want to draw towards this one. And then we also have quite large wicks which we can pay attention to as well, such as this wick right here. And what I'm going to do is I'm going to split this wick up just so that when we drop down to the low time frames, we can acknowledge specifically, the levels, and then based off that, what you'll find is that the open, the 25% level and 50% level tend to be very sensitive. So if we find that price are tapping into them and it's on a monthly level, it's likely we can find some kind of resistance at those levels. So I'll get that marked out. I don't unfortunately have my extra screen right now, so I can't show you guys the high impact news we have this week. However, we do have high impact news on Wednesday, Thursday and Friday. So yeah, I am looking forward to this week as per usual. But generally speaking, that means moving into Monday and Tuesday, I'm not expecting too much. And hopefully we can have a pretty classic week in that we see rallying going on. If we're getting a down close week, that is, we want to see rallying moving from Monday to Tuesday, and then Wednesday dropping into Thursday and Friday. So let's take a closer look and let's just mark out a few of these levels. Firstly, I want to mark out the low, because like I said, the low, open, high, low and close of wick, especially on the high time frames, can be very sensitive to price. So we'll get that delineated right now. So this is a monthly low, and we'll just put that on the right, center it. And then, like I said, we have this monthly fair value gap, so I'll get that delineated as well. And then, obviously, we have a monthly low in terms of this south side, as for south side liquidity, as for a draw. So we'll get that delineated like so. And then if we go down to the weekly, we can take a closer look. So here you can see how, what I want to talk about is how the wicks crossed right here. This is what we call, assuming we're going to be running for these lows and we're going to remain bearish. This is a classic instance of what's it called now? I completely forgot the name of it, but there is a term which ICT has coined where on during a downwards delivery of price, when price returns to the previous wick, so not this wick but this wick like so, and it trades into it and then leaves it like that, this is actually a setup for potential shorts or whatever to then continue and get in, so that you can run it right to its outside target. So if it comes back to me, I will bring it up, but on say a 1 minute time frame when I'm trading, or a 5 minute, if we're in a downtrend like this and I believe that price is going to reach for some kind of sell side liquidity target, and I see this happen, this is an entry technique and it's very typical of price. So seeing the way that price traded up into that last week and left it straight away, and we're closing below the previous week as well, is showing heavy bearishness and is hinting to me and suggesting to me that we are going to see a continuation to the downside. So that is nice. But yeah, I just wanted to bring our attention to that. I'm going to make this monthly fair value gap a different color just because it is still a target, so let's make it a light blue. And then we need to start thinking about, the highest we want to see price trade in the new week for us to remain bearish, and then obviously the lowest and where we want to see price trade to. So obviously this is monthly sell side liquidity. We obviously have this as weekly sell side liquidity as well. And then we also have this low as well for sell side, which is this week. But I'm not really too concerned about this week's sell side liquidity. I'm more looking on the buy side of the curve, and the reason I do that is because whatever price does on the upside, it does on the sell side, but inversely. Now, it doesn't do it precisely, but in terms of targeting, we should be using the sell side to be narrating our sell side narrative, if that makes sense. Like the buy side of the curve should be telling the story of the sell side and how it's going to get there. So I am looking for us to start stretching down into this range. And then, as I was saying, we want to look at previous weeks. So we know that this is a monthly low. So we know that this is a sensitive level. And then on the weekly, if we split the previous week's wick, because remember wicks are gaps too. So if they're gonna act as gaps, we're gonna treat them like gaps. And if I split the previous wick into quarters as well, you'll see that 25% level also lines up with that monthly low. So when we see layers like this, so on the weekly it's a 25% level of a wick, and on the monthly it's a low. When we see it layered like this, it makes it a very strong PD array for us to potentially use to assume that price will want to reverse at that point, assuming we get up there. So remember, so basically what I'm saying is that moving into the new week, the very highest I want to trade is here. Any higher than that I'd be a little bit concerned. But overall, obviously, if we're expecting a down close week, which I am, then any kind of rallying above that midnight opening, wherever it is, I want to see us reach here at the very top. So maybe on Monday or Tuesday, any higher than that, I'd get suspicious. But I want to see us touch there, and then I'd want to see us start to turn around and start looking for, as I said, some kind of sell side PD arrays from the high time frame, such as the weekly or the daily. So let's go to the daily now. And you'll see again that monthly low, and you'll see it just happens to line up with our bearish order blocks. And then we also have a fair value gap above here as well in the premium. So again, we need to identify premium PD arrays as well as sell side, because we expect the premium ones to be tapped into before we run for the sell side. Furthermore, we can look at the premium PD arrays and look at how we treat them, so that when price trades into them, if we find it's resistant at it, or maybe only trades to the 25 or 30% level, 50% level of it, sorry, it then acts, it demonstrates the bearishness. So let's look at this fair value gap, because it's a very obvious one. We'll drag that out, and this is a daily fair value gap, and I would like to see price trade up into here. Ideally, it doesn't trade through it, but remember, I'm open to the idea of it trading through it. And remember, it's only Sunday as well, so I tend not to talk too much on Sundays, just because Monday could open and we could be in a whole different stratosphere, as in, like, I don't want to talk too much, but I tend to let Monday trade, and then based on Tuesday, then I'll rethink about how I want to see the fair value gap get treated, or how I want to see us trade up into the premium, if that's going to even be an offering. But nonetheless, we should mark out what we see. So this is a premium daily fair value gap, and I'm happy for price to trade and fill that. And then again, as I was saying, I'm looking for this sell side liquidity to get ran, this sell side, and then we do have a nice imbalance within the monthly fair value gap down here to get traded to. But obviously first we need to see some kind of rallying, and it doesn't mean that price has to get down here next week. It's not going to be the end of the world if price doesn't expand all the way down here. We've had a pretty strong previous few weeks. So as in, we saw large movement last week, we saw large movement the week before. So I wouldn't be surprised if price struggled, or we found some consolidation as we started to get towards this sell side, especially looking at the consolidation we see here. So you see this up and down price action. Price is going to struggle to trade through this, as far as I'm concerned. It's not going to be able to cut through it as easily, and you can see how it stopped price dead in its tracks last week. So once it's getting through here, it's going to, there's going to be a point of distribution that's going to occur here. We're likely going to see some back and forth price action for them to redistribute, and then continue, assuming price is going to trade on lower. So that is something to take into consideration. But you can see how nicely we swept below these lows. Again, when we're seeing clear displacement and a willingness to go lower, it's just we need to be aware and open to the idea of manipulation. So what you'll find that on Sundays, when we're looking at the markets, you'll see how strategically I'm approaching things. It's not as technical as when we get to that Monday, Tuesday, Wednesday, Thursday review, purely because we're just looking at it as an overall arching theme as to what we want to see. And if I'm expecting a down close week, I'm happy for Monday, Tuesday, and Wednesday to be up close if it has to be, and then deliver lower as we move to the latter parts of the week. Another thing I want to bring our attention to is this small gap right here between this high and this low. We haven't traded to it yet. So what we might even find is that we might drop lower on Monday. We may trade here, and then it will rally maybe Tuesday, Wednesday. So there's different ways in the week can deliver. I do have a video when I back tested weekly profiles. I should do one again, because that video, I think it performs really well, and it still does. So if you'd like that, or if you'd like me to cover weekly profiles again, do drop a comment below, do drop a like. But my point is, I'm looking for I'm going to have this marked out, because I'm expecting this, that basically if we don't trade into this daily fair value gap, and we start trading lower straight away, and this finds support, then I'd expect this to get traded to, But if we trade to this first, I'm happy for this to get disrespected, and then us use it as resistance. But nonetheless, we're going to use this as like a barometer for price. So we want to see this as long as we're above it, that's fine. Once we get below it, I want to see it treated as resistance, and price push on lower, a bit like what we do with the Sunday opening level. And last week was a perfect example of how important that Sunday opening level is. Unfortunately, I didn't manage to do a live stream today. I was visiting family. However, again, I will try and do one next week. And if not next week, I'll get something out, because I do want to study last week, because it was very nice in delivery. So hope that all makes sense. Let's go to the 4 hour, and this is going to be the lowest time frame I go to, purely because it's Sunday. I'm not trying to talk too much, but again, beautiful displacement to the downside, ran out sell stops. There's that daily fair value gap I'm happy to see get filled. This is that level again. This is the highest I want to see price trade. And what you'll find on this time frame as well, which is quite interesting, is we do have a breaker. So if you look at this high, this low, this high, and then the displacement, this last down close candle would be considered a breaker. So, and you can see how that literally lines up with that monthly low I was talking about, which would add, again, remember it's layered, so that would add support to our suggestion and confluence as to why when price taps into it, I want to see it struggle, I want to see it reverse at that point. What would also be nice if that is to happen, so if we are to reverse at that point, or if price rallies and then we see price drop, you see this gap, this downside delivery that we have over here, that can be used as a breakaway gap, as in when we have gaps left at the beginning of a move, like up here, assuming that price is trying to get down into the discount. When we have gaps like that and they get left open, it's classic, and it allows for it's a signal for price, basically, is what I'm saying. It's nice to see, so that would help add to that. So that's going to be everything on dollar. I hope that all makes sense, but that's generally my expectations. But I am looking for us to get down here. Again, whether it delivers this week down there, whole nother story, and how it delivers, I am expecting quite a lot of high resistance. However, based on how much high impact news, I think it will get down there. It's just, I can imagine there'll be a lot of manipulation, as in a lot of back and forth price action, maybe midweek, and then, to get down there. Now, you could say, oh, there's back and forth action every week. There is, but you could argue last week was pretty clean in that we rallied right until Wednesday, and then we had displacement and price delivered to the downside, like classic week. So it'll be nice if it delivered like this, but the chances of it happening isn't very high. So that's something to consider. Let's head on to GBP USD. And if we go to the monthly, we can take a closer look. And similarly, obviously, we're looking for a continued push into the premiums. Here's GBP's premium PD array. And then we can look at the previous month's low again, see like what I just did on dollar, except we looked on the high, so inverted. And then let's go down to the weekly and take a look. So if we want to see an up close week on pound, we do have a slight fair value gap right here. So I'm happy for pound to drop down into that if it needs to. Ideally it doesn't, but that's just something to consider. In the discount, so price may want to come down, maybe fill that, create the low of the week, and then leave that in order to expand on higher. And then in terms of buy side highs, I'm looking for weekly highs. So I'm looking at this high as a buy side liquidity target, and I'm looking at this side as a buy side liquidity target. And this gap specifically, remember, this is the gap from the weekly. You'll see it's also here on the week. A gap from the monthly. It's also here on the weekly between this low and this high. So this is definitely the imbalance I want to see price expand to. So with that in mind, same thing. We want to see the low get created Monday, Tuesday, and Wednesday, Thursday, Friday have the expansion. Now, I always preach this, and a price doesn't always deliver that like that. We need to understand that. It's just having it in mind. It's knowing mentally that, okay, well, at this point of the week, we're still above or below that Sunday opening price. So if we get to Wednesday and we're still below this opening price, it's likely we're going to run for it. Kind of like what we saw last week. We were hanging around for a while below that Sunday opening price until Wednesday hit, and then we ran for it. So it's just having that mental capacity and understanding of where we are in the week. That's why I always preach about the formations for the week and understanding how it should form to create the the high, the wick, the open, low, high, and close of the wick. So here's the an inversion fair value gap, which I just recognized. The reason I'm marking out this one is because it's on a weekly level, so it should still stand. So although we've got a fair value gap all the way down here, personally I wouldn't mind if that stayed open. That would show bullishness, and then it would be nice if we could tap into here, and then that would be enough for prices. In maybe we create the low in there and price turns around. So that's something to consider, and we'll have that marked out, obviously. So let's mark that out as a weekly inversion fair value gap. And then let's go down to the daily, take a closer look, and you can see our price is already working its way towards that, which is completely fine. So here's a bullish order block. Again, technically this should be able to hold support. Again, I'm looking at this consolidation over here. Let's look at this. I spoke about this consolidation before. I think the other week, if you remember. But my point is, look at how we've closed above it. I'm happy for price to tap down into the consolidation. That's not a problem. The furthest I'd want it to tap into there would be the 50% level. It would show a significant amount of weakness, but it is possible. So it's something to consider. And then that also lines up with this weekly fair value gap, doesn't it? So there's possibility that we will get down into this, to accumulate more stops. Because remember, there was a point of distribution on the south side, so they're going to want to accumulate at this point on the buy side, and there's a low there already that may have been engineered intentionally. So if you find that pound is significantly weaker and trades through that weekly inversion fair value gap, then I'd be looking for us to hit that 50% level and start tapping into this gap right here. And then I'd want to see us later, maybe not even this week, maybe later into, next week and March and whatnot, turn around. So although I'm looking for this buy side to get hit, it's very possible that we might find that pound's digging deep, depending on its weakness, into its, back into this consolidation. Because this tap into this fair value gap isn't enough. I don't think it's accumulated. I don't think that's enough, basically. So we've traded through it. We've tapped into this fair value gap. Cool. Expansion. Cool. But look at how much resistance we're finding at this level, at this high. And our price is coming back in its range. I wouldn't be surprised if price wanted to, reaccumulate down there or drop down back into that and create some kind of manipulation. So that's something to consider. Let's go to the 4 hour. And you can see not the cleanest of price action. Again, lows here and here. Small gap right here. So there's possibility. There's definitely room for price to want to get down there. And I'll be paying attention to that moving into this week. Really, I'm looking at this inversion fair value gap. I don't think it's going to do much. But once we're below it, if we find that it finds resistance, we can use that as a setup to go short. And then we'd expect these lows to get taken and running into here. But that's assuming we get through it. But looking at the way at how, weak price is looking at this point, I wouldn't be surprised. And then if that was to happen, then obviously at that point, dollar will be rallying quite nicely through that daily fair value gap and towards our monthly low, which I was talking about as well. So it's all doable. And then we'll finish up on Euro USD. We'll start here on the monthly as well. Same thing, we've got a nice premium PD array for price to want to try and draw into. And then let's go into the weekly. Now, Euro's a little bit messy, as you can see. We're still in a consolidation. We haven't taken out this high. That's interesting. So I'm looking for this high to get taken. That would be a nice change in the state of delivery in terms of that will confirm to me, okay, we're definitely bullish. And once price gets above that high, I wouldn't be surprised if we start to run quite aggressively. But what's interesting is how we crossed over with this wick. So what you'll find is that, so if we mark out the low of that wick like this, I'll show you. And then we mark out this low of this wick and we cross them over. This will now act as almost like a bullish fair value gap. Because why? We can see delivery on the upside and downside here, then upside, and then downside, then upside again. So as far as we're concerned, this is a, what's the word? There's a phrase for it, but this is a fairly traded trading range. As in, we've basically done this in it, and I'll quickly draw a diagram with it. So we've traded up. This is not the right time frame to do this on. Shut to that hourly. Apologies for this. So we've in this range, my point is we've gone up, down, up, down, up. As in, it's a fairly traded trading range. And you can see that here. Up, down, up, down, up again. So with that taken into consideration, let's go to the weekly. This range shouldn't be able to get traded through. So we can use this now as a indicator for us. As in, if price manages to trade through here or get any lower than that 50% level, we know we're probably on the wrong side. It shouldn't be able to get any lower than that because it's a fairly traded trading range, meaning that the 50% level should be the very lowest it should be able to trade within there. So let's go to the daily. You'll see that. Look at that. Look at how price is sitting on that absolutely perfectly. We've expanded. So again, moving into the new week, I'm happy for price to tap down into there. 50% level is the lowest I want to see price go. Any lower and I'll be it'll make me sigh. It'll make me like, oh gosh, here we go again. But ideally, we stay within this range, and that's a bullish order block as well. So that adds to it. Let's go to the 4 hour, and you can see there's a breaker here, low, high, lower, low expansion. Even though we haven't taken out this high yet, which isn't ideal. But my point is, I'm happy for price to run down and do its thing down here if it needs to. and that's in line with pounds discount PD rates are marked out. Here's the breaker, the last up close, so let's drag that out just so that we're aware. Again, depending on, it's all time, so although I'm talking about all this, it all depends on time. So if we're trading into this on like 8 o'clock on a Tuesday afternoon or on a Wednesday, and we find ourselves in here, that would be a perfect setup for me to go long, assuming that, you know, dollar's in line with my expectations and that there's a reversal forming, because that's a breaker, low, high, lower, low. It's in a range where we expect price to find support. It's above the 50% level. It's at the right time of week. You know, it's after the Monday, it's after the Tuesday, we're below the Sunday opening price. All of these things would come into account, and then I'd be looking for these relative equal highs above here and here to get taken. But easier said than done. And like I said, this seems pretty this seems like a pretty shallow target for price compared to what GBP's got going on all the way. You know, with my willingness for GBP to drop down into here, whereas the euro, I want to see a little bit more strength on its side, just because again it's the range which it's created. Look at the way we traded through it. I don't really expect or want to see price dropping below it, so I'll be paying close attention to that, in line with dollar obviously rallying into this range. Again, especially the way it's ran these stops above here, grabbed accumulation, left it. It shouldn't need to be up here for long if it's going to be up there, and we are actually bearish. But yeah, that's going to be everything, guys. I hope that all makes sense. But yeah, make sure to turn on post notifications. I will be posting tomorrow. Don't forget to drop a like, drop a comment, smash subscribe, join the mailing list, and join the Discord as well. All the links are in the description, and I'll catch you guys tomorrow. Peace.